All right, good morning. It is 10:12 Sunday after the day of Friday. So Friday was definitely painful. You can see it on my screen. The market's pretty much dropped between 3 and 4%. And the same old problem that scares people, which are tariffs, even though nothing has changed. So the tariffs have been here this much, but they were kicking the can, hoping to work out a deal. Our hopes in this group was not high for a deal, just like in 2018. They never made a deal, and yet business finds a way. Last night I made a video for the indices. I will make another one either tonight or tomorrow morning, getting us ready for this week. I think we would do well if we just focus on the lines and be prepared either way. You're looking at the S&P, and my expectations is they will try to buy the dip they have for the last all year, to be honest, and they will try to make a higher high. So the changes will be maybe this week, and I'll follow up on them like I said yesterday. How high will they go before passing some important lines below? So today's videos are 3, and we're going to cover 120 charts or so. So they will be alphabetically ordered, so you can pick up each video and scroll through to the tickers that you're interested in. Unless you have some free time, you want to watch the whole 2 hours, be my guest. And I would appreciate it if you give it a like if you like it. If not, let me know what you don't like, and we'll make it better. Only 10% of you actually hit the like button. So if you don't like it, let me know so I can change some things. And also, if you don't subscribe to the YouTube channel, our YouTube channel, you do that and put the little bell, notification bell. That'd be great. Anything you can do to help the channel, that'd be awesome. We'll start with the king of stocks, Apple. So on Friday, here's the heat map. There was no hiding anywhere except for the typical, XLP type of stocks up in the right-hand corner. They'll try to hide in something, and that's proof positive that they want to try to rally. Otherwise, they would sell exactly everything. So they also sold crypto, so they weren't trying to hide in many things. So back to Apple. Apple was overpriced, and if you were with me in the live room, I thought it needed to come back down. The news that it came up with, although okay, it wasn't a superstar news. And it's just going back into a more reasonable zone. In fact, at this level, for me, if I was buying the stock of Apple, I think I could get a better bargain over time. But this is a tradable dip. It's falling into recent history support, and you have backup support. So anything around 230, consider it support, plus or minus a couple of bucks. And if that fails, you have the same level of support above 210, 207. So depends on your... If I got long at 250, I'm not adding here. That's for sure. If I wanted to invest at 250 and I was itching, this might be a small opportunity. If the stock market continues lower, I can pretty much guarantee you a retest of the 200 zone. The best way to catch it and leave room for error is to sell a put spread. And that's going to be a common theme. So the buying the calls is the most aggressive way of catching a drop. And that is if your expectations are for an immediate reversal and a breakout, buying calls will bring you money fastest, but put you at risk fastest as well. Buying shares and selling covered calls, that's probably a little bit easier for me to accept. Selling puts to own shares, not at these levels. Selling a put spread instead to own shares, yes. So that's my order of what I like and what I don't like, and that probably is true for most stocks we're going to cover today. Abbott Labs. Notice I'm not showing you my markings on those stocks. In fact, let's go back to Apple and see curiously what I had there. Nothing much. All right, just making sure. Choppy. So it's not been yet affected by the drop. That means that the investors are comfortable with it, plus or minus. You do have support at 129 and back up at 127, and you have the rejection of anything above 136. In this environment, we did have 2 lines. I still would gather these being resistance, and you have area of support. It's like I can just move everything over. We're still stuck in a wide range. if you want to ignore this July dip, you'd say this is where the bulk of the interest is in the stock. So no rush to go in, no rush to get out. Depends on what you want out of the stock. Now, it does report earnings in 3 days, so drum roll, please. Come to the live room the day of the earnings before the bell, and we will look at the options. We've been spot on with expecting the move. Accenture, one thing you may not have noticed about Accenture, I believe it is the third largest employer in the world, like 800,000 employees, behind Walmart, private employers, behind Walmart and Amazon. I did not see that one coming. I would have lost at that question in trivia. Okay, so I don't like the fact that markets cannot stop rallying, and this one, it looks like the opposite of the market. So that's pretty crazy. Let's zoom out and see what the heck is going on here. Yeah. So this is the pre-pandemic or the 2020 crash zone, and it's all below us. So even though this looks like the end of the world, we're still above the pre-pandemic zone by a mile. And so it is an okay starting point. You should know that the market is selling it, lower lows and lower highs consistently. I think 280, 270 zone is extremely difficult to overcome, and that would be the real test. If you can see it on my screen, that's where they lost their lunch, 280, 270. And now you can say the same about 260, but not as harshly. So now they have to prove that they can withstand 230, hold 230, 225, to try to mount an effort towards those other lines that I mentioned as difficult. So expectations of upside from here, I mean, it is possible. Investment ideas for the long term, nibble, leave room to add. Selling puts to own shares, I don't like to do that at market highs, but I guess it's doable. You can start it as a credit put spread. Adobe, everything I said about Accenture applies here. Adobe is almost never cheap because it has a good P&L and it grows, but it's never cheap. So technically, everything on this picture still stands. It must hold. Earnings reaction, that's the box for the earnings reaction. So that, or at least earnings forecast. So what I'm seeing here is a stock that is trying to hold where it needs to hold, so it doesn't come back down towards the 300 or 290 zone. And that's been the case for months. And so they're doing a good job so far, stabilizing, and they're pinching the price action. You can see them lower highs and flat bottom, so they are gathering energy, and they could spring. So if you're holding longs, I get it. My favorite longs in this one is the opposite of what I did say to the IWM. I would take a position below it that is bullish and leaves room for error. So I would sell a put spread. And with the cash, I gather, I would buy a longer dated, so December even, call spread. So if I collect $200 out of here, I'll buy a $250 debit call spread, so my out-of-pocket expense will be nothing. That's the strategy I would be employing here. You can buy shares. It requires more capital to accomplish the same things. You can sell puts to own shares, although I don't like it. You can buy calls. That's my least favorite, although that will bring you to cash the fastest. So if you can forecast a hold on the market and a bounce here, then buying calls would be the most aggressive. Selling puts, buying calls. But I would rather this version. Selling a put spread, very finite risk. Buying a call spread, no money out of pocket. Autodesk, holding up well, falling into the breakout level from the earnings. That's normal. So it should find support. 296 to 280 zone from which it sprang should be support. I don't want to talk about losing 280 because there's no evidence of that. Rushing to be long. If I bought it up here at the highs, no. If I'm looking to get long because I missed the earnings reaction, that's my chance. Again, I would like to be long without any money out of pocket. Same credit put spread to get cash, debit call spread. Or nibble on just a few shares. AFRM. So this is a pretty nasty spill on a firm. I'll tell you why. Technically, one of the most amateurish statement out there, people say, "Oh, I see a head and shoulders." That is technically correct. And the downside target is big. So not to mention numbers, but it will definitely lose all of the supports dating back to July. They can erase that. The bulls can. They are at a critical point. 68 would be almost too late. They need to get back to 74 plus to eliminate that conversation. The neckline is somewhat of a quirky angle, but it's there. Basically, you want to recover this area. Hello, hello. You want to recover this area because if you don't, in theory, on paper, you're opening yourself up to this much downside. That's the minimum. And the maximum, not the maximum, the maximum I won't draw because then it'll sound ridiculous to people. The maximum is down in the 50 flat or the high 40s. So let's just leave these two. So get back towards the red line so you can avoid this whole conversation. It is possible. This is a firm. If it's sensitive to consumer spending, the longer the government shutdown goes on, the more shy people become about spending. We'll see. I do like the company in the long term. It's definitely not a bargain basement. Just keep it on your to-do list. This is an ADR seemingly falling out of control. Oh my goodness. Okay. So it's falling into levels from 2014. Vulnerable to $35, $36 down to here, which is 2011. I don't know why I would be interested. This was a huge bounce level from 2020. I'm hesitant to like a stock that is this far back in time for support. But if you know the company and you're confident that their P&L is okay and you're invested, if I'm invested, it's almost too late to panic out. If I'm looking to invest for the long term, I would start a position with the ability to double it over time. I don't know the company. And I can tell you rallies into 60 will find a lot of sellers, technically. Albemarle, nice bounce. It was one of the ones that we needed, we were tracking before. And so this one, while the market is falling apart, this one is busy trying to recover some lost glory from last year. Not an obvious entry point on a longer term basis. If you now just gather the courage to go long, I would say you might get an opportunity closer to 80, depends on what the market does. So I would be looking on this dip to get long if you know the business. Next time, see if you can have the courage to act earlier if you know the company. I don't very well, so I wouldn't pound the table. This drop has satisfied this red W's 2 out of 3 targets. The third one would be around 84, 83, 82. And if the market sell-off persists, maybe you get a retest of the mid-70s. They're buying dips, clearly, in this one, and they're facing resistance from the 115, give or take. The easy money has been made on it. Amazon, I thought it was very vulnerable from where it is, the altitude it's at. So now you have confirmation that we are selling rallies in Amazon on a swing trade. We have lower highs and lower lows going back to September, all of September. So the September 17th spike, which was in this, the early September spike, which was that. So we are now selling rallies. Now the test is right there, which is where we are, the lows of Friday. If they hold 212, 211, they're okay. If not, then you might continue to drift to the 200 zone. Now, in 11 days, it will have earnings, and I believe Tesla and or Netflix will start reporting in earlier than that. This coming week, we have banks. But next week, I believe we have Tesla. This week, I think we have TSM and ASML. Those might move techs. I don't think Amazon will be one of the ones. So watching on the bounce. If they can take out 228, that would be amazing news. If not, can they hold the lows that they were testing before? Good company, finding an entry point. Yes, if I'm long shares, I'm selling covered calls, and that's it. By the way, we went long, but we did credit put spreads. So if you need help with any of those, I don't think any of them are in trouble anyway. APLD is almost never an obvious entry price. Apply Digital, that spike end of October, where is that? October 9th, sorry, beginning of October, was phenomenal on earnings. So it rallied 30%. It didn't even give that back. So if you're interested in a stock because of its future prospects, because the P&L is horrific here, you know, the losses grow faster than sales, then you're doing homework and you're looking out in the future. Not so sure what you're asking here. Is this a buy the dip moment? Hell no. It is not a buy the dip moment, not from the charts. That's why I'm saying do your homework on the company. I think you'll be better served than the charts. I can tell you emphatically that if you chased it up here, I would not be adding down here, even though this is a 28% drop or whatever it is, almost 20. There's no way in hell I'm adding until it hits 20, if it does. If it doesn't, you didn't need to add. The investment is fine. So that's my take. ARM. All right, so a couple of red things on my screen. Those are bearish. We hit a couple of targets of those two combined bearish things. We're hitting a visual break in support and resistance. You can see that they broke out from this zone and they're falling back into it, which is normal. So this should find support. And I think we went long, saying sell a put spread, buy a call spread. Yep. And if you did, you made some money. If you didn't book it, And so now you have the opportunity to, quote, catch a good falling knife. And it will depend on the rest of the market, what happens with the support. The support is all the way through 140, 138, and backup support even better. The trouble doesn't start until you lose 26, and that's a mile away. So you need 2.5 really bad days like Friday for this one to lose footing. ASML, TSM might influence how the stock trades this week. We'll see. Fundamentally, it's fine on its own. If I got long above 160, I am not adding here. Aris Mining, not familiar with the company itself, so we will speak about the chart only. Oh my God, okay, so looks like it's one of those reverse split things. Yep, right there. One for 15, one for 25. Okay, so this stock is a penny stock. Whether you know it or not, that's my take, because it reversed one for 25 and one for 15, so it doesn't get delisted. I'm not a fan of these stocks. There's nothing I can help you with. It is rallying to high heaven, but it's still a penny stock. And it has sales, so that begs the question, what the heck's going on? Why is it a penny stock when it has sales? So charts are not going to give you a good guide. Like if I zoom out, I see nothing. That's some crazy stuff. Do your homework on the company. Technically, for short term, the support zone is around 8 to 840. Backup is 650. AVGO, the reaction to its earnings was huge, and it was stuck in a descending channel. We covered it, those purple lines. And oddly enough, Friday was the first day it ticks above the white circle, which we deemed important. And the funny part is, I don't know, it's not funny if you're long. The funny part, it's just funny. is that we were also watching the red circle and it hit both in one day. That is extreme violence. So I've said these words before in the live. This market has extreme conviction, but none of the courage. Like they all know that, oh, up is good. I want to be long. And then when red comes and they have no courage to see any red. So in one day to go from one extreme to another that they've been trying to consolidate for a month is pretty disappointing, especially that it closed inside the red circle. So maybe it's back to be inside the purple descending channel. In case you're having a hard time visualizing it, it was making the exit and now it's back. So this week I want to see it at 332 or better. So let me take out all that junk and put another line now that is important to us. It's actually not a line. Well, it is a line, but I'm going to leave it in purple. Call it important pivot. That's one. And another one would be 340. Okay. And this one is probably also would move with TSM and ASML. Okay, let's go here and see if we have any better information. 336 may matter as well. And the lows of Friday are important, of course. American Express. Interesting. Is this a wick? No, what the heck is this green thing? Maybe it is a wick. Wow. Check your charts. I'm seeing something that extends down to here. I don't think that's a wick. Anyway, we're right there. That's a pretty funny coincidence. So technically, this one triggered a head and shoulders and almost drew its entire target. Just like what I was showing you with that other stock, which I can't remember. That's one neckline. You can bend it and say this is the neckline. Either way, the target zone is 312 to 300 from either of those. So in order for the bulls to regain some control in this chart is they need to be above 328. 328 zone. So I'll give you a marker for it. If they come up into this box, they have a chance at not having to finish the whole thing. Otherwise, you might come back and explore these. So good company. We'll go with the flow and earnings this week, I believe. That should be fun. Come to me the day of the earnings of any company. We read the options data really, really, really well. That's where the money is. That's where the market maker's money is. Most often, they behave according to what we are expecting. I mean, it's still a lot of guessing, but educated guesses. This is terrible. Absolutely horrific price action. They need a bounced stat to get back above 215 to 217. I argue 216 and that is necessary. I am short Boeing for every month this year and early next year. I've actually been shorting Boeing on rallies since last year, but I do go long on dips. This is not one of those dips yet. We went long on the April dip and the May dip. So June. For me, they need a bounce immediately to recover. I'm going to say 214, give or take. Good company, got good news recently, news that can move the needle. They allow them to deliver, I think, 2 extra planes a month. If they can produce 2 extra planes a month, that is good news. If not, who cares? That's not going to be accretive. So this is the zone I want to see them recover. I'm not going to put it flat. I think it's more than flat. They need to be around 218. I'm going to revise that number. The high point of volume is that red line. Look at it back there. So they need a jump fast. And they have support. So it's not like it's going to collapse. It's just I wouldn't hold calls. Selling put spread, yes, I might sell some put spreads if the earnings are not 3 weeks away, 2.5 weeks away. So in about 2.5 weeks, they report earnings. I would trade the reaction of the earnings. So if on the earnings they fall, I will go long aggressively. And if they rally back, I will reinitiate some of the things I'm going to close. I did share a 240 credit call spread for December. This dip might give you an out if you don't like it. I'm still in it. It is losing $30 per contract. If you're uncomfortable with it, you can do two things. One, sell a put spread against it and collect $100. And that lowers your maximum loss. It opens the opportunity of losing as a bull, but you lower the maximum loss. Or if it's a large position, I would cut it in size. So then if they rally again against me, I would have a smaller problem to deal with. And you can do both. I could cover some credit call spreads, get rid of them, and sell a few credit put spreads. So now I made my problem a lot smaller because the maximum loss got smaller from buying back some of the risk up above and selling some bullish risk. So balance my portfolio. Depends. All of my other bets are winning. I'm going to leave them all in place and look for areas to go long. Support 198 to 201. Backup support, which is the one I like more, is in the 180s. I basically want to see them, I don't want to, but I would be comfortable going long big if it falls into this neckline right there, if you visually see it split around 187 or so. Let's see, what else do we have? Okay, that's enough Boeing. Great company, duopoly and all. BE, who is this? Bloom Energy. Okay, so the energy trade is above my pay grade. In other words, I have not spent a minute investigating who's going to be winner, who is not on the nuclear thing. It seems to me too broad. So do your homework. Follow somebody who does do homework on it. And technical comments. You have a very aggressive ascending channel like the whole market. You can see them. And they're falling into that channel. So one would expect that they want to bounce right here. Okay, so let me take these squiggles out and tell you. 76 should be bulletproof support in order to maintain this ascending channel. Okay, now here's the risk. I'll draw it. It's not a forecast. It's visualization of what can go wrong. Let's say we have a couple of red days and it bounces here and I cannot hold the bounce. In other words, this is the day they want to break the support, the trend, then they do something like this. Whoops. This is the risk. Support, yes. If the rally back doesn't breach the prior higher high, then you're at risk of coming down to 68. So from a bull, I like it into 78, 76. I like it for a trend trade. And if it fails, I like it better, much better, into this zone down here. Technically, this looks like a better breakout area. So, and there are some backup supports. So that's the visual based on your speed. If I got long here, I'm not doing anything. I don't know who that is. Brookfield, the Renewable Corporation. Sounds like an energy company. I don't know what to tell you here. It's not an entry point. Maybe at 36 or maybe at 35, technically. Okay, so zooming out years, this is definitely not an entry point. You could argue that they broke out from 34 and targeting 46. If you're in it for that, then don't change your mind. That's a longer term bet. If you're trying to line up yourself for it, you buy the dip, so get long somewhere in order for that to happen. I don't know anything. I don't know how likely it is for them to be able to break out that way on a higher time frame. So do your homework. The chart says you have support at 34, back up their support anywhere above 30. BITO. I am shocked at the headlines I'm reading. Just shocked. I don't follow news. You know me. Zero. I get some news from you. And Kramer is bullish Boeing. Sell, sell, sell. So I get news when I go to Twitter. I log in to post a tweet. I see this, whatever is in my stream, and I follow no one there. So whatever Twitter thinks I need to see, it shows me. Every other post is about liquidation in crypto. The biggest liquidation day, biggest this and biggest that. And I'm thinking to myself, I didn't even look at crypto. And I looked at Bitcoin futures. They were only down 10%. And they keep saying 17% is the largest drop. Well, if Bitcoin actually fell 17%, I didn't even bother to go check. And the futures didn't. They only dropped 10. And the people are getting liquidated. That means, well, it's not the triple leverage when you get liquidated on your account, is when you spread the risk across all of your accounts. Portfolio risk, sometimes it's called cross margin risk or something like that. So you tell the broker, hey, I have $1 million in that account. I have 10,000 in this account. Let me take risk in this account based on the whole portfolio, everything, that other account and this. So cross margin account. And they say yes. And this small account gets in trouble because you're going balls out in that small account. They liquidate everything to pay for that mistake in the small account. Well, that's gambling in this case, because this is the most aggressive asset class ever in the history of personkind. And you do that with, that's just insanity. So this event is not the violence. The violence is the way they're trading it on the way up. Having said that, BITO is something I would accumulate over time in an IRA account. The caveat is it's Bitcoin representative. It's not actual Bitcoin, but it's a representative of Bitcoin. So only strong stomachs and only in small amounts. The lucky thing is that if Bitcoin is rallying, this one will make you a fortune in dividend. They don't commit to paying dividend, but if the Bitcoin trade is working, they will pay you like $1 a month in dividend. And so my take is the next time crypto crashes down to zero, I'm going to load up my IRA with some of this stuff like we did before. And if you hold it long enough, it'll be free. In other words, the dividend will pay for the entire purchase of the stock. This is not an entry point blindly, but if I treat it like, oh, I'll buy $100 a quarter or $100 a month, whatever is good for my portfolio, and it should be small because it's risky AF, I would accumulate some of that. So we bought it at 10, 11.50, and 13.50 for the group. We sold some $9 puts too for a while, and they didn't give us shares. So those who did that on the last crash now own it free and clear and are collecting dividends every month. You can see it right here. Let's see here. 86 cents 2 months ago. This month, 75. 3 months, $1.20. $1.20 on something that costs $20. That's per month. That's insane. But they don't commit to it. So don't say Nick says this thing pays $1 dividends. It doesn't. Sometimes it does. Sometimes it pays nothing, 10 cents. Okay. So chart-wise, you have support, you have backup support, and you have the odds of a crash because it's crypto. Okay. This is, it plays, the company says they trade Bitcoin futures, and if they achieve a profit, they'll share it, the profit. Okay. Read the prospectus. Baker Hughes, bearish setup, target 1 almost there, 44, target 2, 40, 40.5, target 3, 0. No, not 0, almost 33. What are these targets? It's this red W in front of me. Do they always hit 3 targets? No. 1 is almost always done, and it's almost here. 2, in this environment, is a stretch, and look how nice it is. 2 will get you right into that circle. That's beautiful. Well, look how pivotal this point is. So I like 41 a lot. If you want to buy it at 41, you can commit and sell puts there. Earnings in 11 days. Oof, don't do that. Anyway, BMNR. Ouch. Volatile asset class spiked to high heaven. I don't know what the hell that was. Earnings report. Okay. I helped some people trade this thing before. I forgot what it was. I want to say it was Ian, maybe. Laurel, somebody, maybe both. So these are lines from before. Let's see how well they were. Check it out. That's where the problem started. That's where they hiccuped a little bit. That's the highest point of volume. So that line was good. And I will move those lines in order to represent where the problems are. That's the problem now. We will make that a resistance zone. I would say this is a support zone. And of course, this is a support zone. Like anything below 46 is a zone. Probably better represented with a box. Open candles. There's not a lot of open candles. So this is what it is. Is this a buy the dip moment? Well, it depends on what you know about the company. Better support is around 32, 33, 34. Yeah, I just don't like all of this. Do your homework and figure out what the heck that was and come back to me. I don't have time. Bitcoin, that is not the ticker for Bitcoin, but that is, let's see, Bitcoin is BTC USD for future. So we fell 10%. Big deal. Buy the dip moment if you're trading the range, or, I have 3 support zones. If I remember correctly, somewhere around 102, there's an area that needs to hold. And if you lose it, meaning you go down to 98, you might have some downside. So far, they bought every dip. I think Bitcoin needs a big drop. And I'm not sure they're going to let it happen easily, because now Wall Street has its fingers on it. And they have their clients' money invested in Bitcoin futures and such. So they will fight tooth and nail to tell you, oh, it's a bargain. What's his face? Hey, Ian. It was, Tom Lee, he goes on CNBC. Should we do it? Like, I'll do it at the risk of pissing some people off. Okay, so it's not a conspiracy theory. It's a matter of dollars and cents. CNBC makes its living from experts going on CNBC and talking. And we, the viewers, are interested in those experts. We watch because of those experts are there. If CNBC doesn't give the experts the platform to push their own books, then those experts will go somewhere else and CNBC would lose our eyeballs. So CNBC is a supporter of these companies. So it's not a coincidence that Tom Lee comes out and tells you it's going to 200,000 before it takes a poop. So then everybody chased it. They got out of their positions and now get back in on dips. So he's a good guy. He's a smart guy, but don't necessarily buy when he says buy. Okay, so that was a PSA for today. Put it on your buy list and wait for days like today to buy. So it needs to hold 100,000, give or take. Otherwise, we can talk about more downside. I am invested in crypto, and not for a second did I go check my account yesterday, or will I today. You know my story with it, okay? It's a lifelong investment, not a flash in the pan. We already made a fortune on it. No joke. Blackstone lost a pretty good line of support, 164 through 168. Better support, 144 through 140, and it should be solid as heck. Look left. That was a good technical. I believe it's a good company. I mean, the P&L is wonky, but it's a good company. It has good reputation. And we have all kinds of annotations here. I don't know if we need all of them. We'll get rid of some. So resistance, look at the same levels of fight back then. Whoops. You see that back then? It's still the area of fighting here. So we can delete that as well and make up new lines. Look, these 2 blue lines, and they're below them. So here I can tell you, I'll move those blue lines over. 174 is important, resistance. And backup is, of course, 180 plus. You can consider 168 as an area of contention. If you want to be picky, 167, 168, round it. So any bounces towards 168 or higher would be my exit points if I'm buying the dip here. For me, the buy the dip is a little bit lower. So I forgot what stock it was. If I'm interested in buying the dip on this one, I would sell a put spread. I want to warn you that this is a bankish. And Tuesday morning before the market opens, we have, I believe, JP Morgan, maybe even Goldman Sachs reporting, or another one. I can't remember who else. And so this one will move in sympathy to the other guys. Banks don't have a good history of rallying on earnings. I remember only one in the last 3 or 4 years, which was 2 earnings ago, not this past one. Their reports are going to be great, but how people react to them is the question. So support below, resistance above, be realistic. Find out first if you're trading or investing, and ask me again. CEG, Constellation Energy. So breakout zone, multiple of them, 336, 348, and arguably 356, and you're falling into the highest most one. So between here and 344, you have a buyer. If you're getting long on this dip from a trading perspective, that is the way you do it. You go long here for them to buy the bounce and then finish the breakout. That's one way to look at things. Let's see if we can pick it apart. It's pretty freaking high. You know, if you're physically actively trading short term, yes, everything I said works. If you're looking for an investment entry, which is a bargain, I wouldn't deploy all my risk here. I would just make it a starter position. I mean, in other words, this is not an obvious entry point all in. A better spot below 340. Confluent, same conversation, falling into a baseline, but the baseline, in my opinion, should be at 21.2 or lower. Cover the gap at least. Whew, what the fudge, man? What is going on here? I mean, this is a good path for sales. Consistent losses, so I don't mind losses if they're growing. Yeah, this is not an entry point for me. The closer to 20, the better. Next time, have courage to jump in on something like this. You can probably sell puts to own shares every week until you get assigned your shares. If you don't know what that is, if I wanted to buy 100 shares today, I might be able to sell one put every week at a level I want, and they'll pay me a little bit a week until one of those weeks they give me the shares. If you need to if you want to learn more about it, join me for 10 minutes during the live every day. In case you didn't know it, I'm live 10 hours a day, more. We can talk. Who's singing Men at Work right now? We can talk if we want to. Is that Men at Work? Oh, Tom Lee is behind BMNR. Interesting. Yeah, I just mentioned his name just because. Okay, so nice line for CLS right there. Don't lose it. If you lose it, you come back down to 204, which is a better entry point. I see, yeah, anything below 204 is pretty good support zone. Rallies will be met with sellers, as is evident. If you clear 264, then you might be able to burst a little bit higher. Those are trading comments, but I think they work as investing comments as well. If I bought it here, I'm not adding here. Comcast, yikes. Okay, that's some scary stuff right there. This turned out to be pretty pivotal. And okay, this company, consistent income, dying business, is it? A lot of profits, wow. To be honest, okay, it looks like a solid entry point between here and 27, 26. But that's 2015 levels. Why are we picking the bottom of the barrel? If it pays dividends, I get it. I mean, that's a support zone that's pretty wide, but it dates back to 2015. So the calamity from here should be limited. That's one. Technically, like, look at it. It's this massive head and shoulders. I'm not that much of an amateur, but to tell you the ridiculous statement is that it goes to zero if this comes to fruition, which means it's in technical trouble. That's it. It's not going to zero anytime soon, but it's just not attractive. It is worth a long with room to add. as a swing trade. I get it. But you're catching a falling machete, and the machete has a 12-inch blade and a 2-inch handle. So be careful, you might lose a few fingers. So don't go all in. Definitely don't buy calls. You buy shares, you sell the cover calls against them, or you sell put spreads to buy the shares and buy call spreads with the money. CME. Okay, pretty exciting move up. Cup and handle brewing. It's not a reason to expect a breakout. It just tells you the upside is there if they want to. But it also tells you they've been failing there all year, or at least all summer. I'm going to say the bears have control of the stock for as long as it's below 280. So you might make money from here on to 280, but you have, I would be a seller of call spreads here if it was me. But there's earnings in 10 days. I wouldn't do it. I'm just telling you, technically, it's not a starting point. The starting point is if it dips next, get long. Like if you wanted to go long now, you should tell yourself, man, I wish I had gone here. Not necessarily at the bottom, but on a red tick. So see if it can approach 266 to go long so you can bust out. Until then, I would prefer to sell a call spread. Heck, you can even sell an iron condor if it's not for the earnings. And short it, but also go long it. For me, it's a no trade. Chipotle, be careful. Be careful. Did I say be careful? Be careful. If it loses 38, I think it loses 35. And I'm just saying what I've been saying for a while. This one lost footing at the 49 area and the blue horizontal line. Target 1 came to fruition perfectly, and we're deciding if we're going to finish target 2. This is not the same company as before. It has gathered a hating following on social media. That could be political, I'm not so sure. But it's also lost the luster of the ex-CEO. Whether true or not, it doesn't matter. Perception matters. So if it makes a lower low, I think it loses 35. Investments for the long term, fine. If I'm long, I'm not adding. If I'm looking to get long, I'll take maximum half the position. Coinbase. This one, I have to tell you, it's found a new way of making money. So it's hard to judge it fundamentally. Look at this P&L. The fact that the P&L is this wild is a no trade for me because it puts me at a disadvantage. I have fewer advantages against the opposition. So I tend to not trade it. But if you're an investor and you see a big red tick like this one, you should not worry about it. The area, those 3 circles at 260 are the visual split. And these boxes are open candles that they might want to come back and fill at some point. I don't know if it'll do it alone. It will need some really bad news. Whoops. So the talking points are pretty important there. If the management comes out and says, oh, we have this to deal with, then it'll fall apart. This path did not play out again. So I will delete it. This is a different company. Don't short it with confidence. We don't know where its dollar is going to come from and how much. Technically, there's a lot of volume around 300, so that should be support and backup support and back up to the backup support. I honestly would not short it. Just find the places you want to be long and invested in it for as long as the conversation is that they can make money from this and that and the other. Okay. I think there was a trade on DraftKings when it fell because of the spikes in coin. So probably trading coin is going long DraftKings on dips. Just a thought. Look into it. Copart. Car company, no? Online auctions. Oh, yes. Yes, I do. I used to be a car dealer because I sold them software. Not pretty. The better support zone is below 40. So if I got long up there, I wouldn't add here. If I'm looking to get long, I would sell a put spread or sell puts to own shares. Learn the company and see what it does if we have a Carmageddon. Great P&L though. I don't blame you for being interested. And the fact that it has a P&L this beautiful and Wall Street's selling it this harshly is it might take a while to find footing. Reminds me of how Square, how Shopify, how PayPal were treated in 2022. Well, the market is at all-time highs, and this one is trying to find a floor. Not a pretty situation. So resistance, anything into 49, I think it's going to be really difficult. You're going to need a headline. Help. Crackle. It's not Crackle. I call it Crackle. Circle. We went long, and it made money. I don't think I'm still long. Let me check. The idea was to sell a put spread in order to buy shares for January. And that trade is still carries value. You can start it now. Okay, so maybe we will do that on Monday. We said, hey, you love it here. Why don't you buy it at 80 or 85? It's IPO. So somebody on Friday would have paid you $350 if you buy their shares at 80 by January. That's what it means to sell a put. So I can sell a put at 80 for January on Friday, minus one put. That commits me to buying shares at 80, which means I break even at 76.50 after getting assigned. That's on Friday. So technically, if you lose 110, you're going to lose 80. So don't do that unless you really can and really want to buy shares. And this is crypto based. They do stable coins. So I like the company. I would buy it at 80, so I can sell it. Now you can start that sold put as a put spread and collect a couple of $100 and have a stopgap. Like if it loses 80 and you get assigned, your bottom line is not zero. It's $10 lower. All right, just to give you an idea, if you did that last time, I did it, that price was $760. So you would have made already $300 per contract. Just to give you an idea how people panic and overpay for things. Okay. Buying calls? No. Buying shares? Yes. Partial if I don't own it. Buying a call spread? Yes, just because it's not so aggressive. Selling put spread and buying at the money call spread, call diagonal, call calendar, not in the money, the calendar. I like that combination. Just don't be so like, oh, this is the bottom, we're going to higher high. We don't know that. CRM was a bargain, still is. I believe we did a credit put spread in it. And I don't have it on my books, so I'm pretty sure I closed it, but I would do it again if I didn't have it. I can tell you that it's very, very coiled. It's still coiled. And there should be a move coming, earnings in 60 days. So I don't know what they're waiting for. Maybe an iron condor. Good company, good management, solid floor so far, as long as it holds 226. If it loses 226, we're going to test the 205. Otherwise, they may get a burst to go to 260. So maybe a really wide iron condor again. Let's talk about this for Monday. Can I do it from here? Add CRM to, oh, it's already there. CROX. It's a good trading stock. It will make you lose your lunch a few days. Very active, and the options are pretty freaking wild, if I remember correctly. So CROX falling into my target again. Look left. They never recovered 86, the support plus. Once they lost it, this was the target. They went there and they bounced. They couldn't recover it and then bounced. They couldn't recover it. And now they're testing the floorboard again. How many times are you going to survive that floorboard? Let's say it bounces. So credit put spread, whoopsies. I hit the keyboard. Credit put spread, yes. Debit call spread, yes. Buying shares only if you want to invest in it and half of a position. Buying calls, yes, with a stop. Any combination of those, yes. Earnings in 18 days. Good company. I think they're venturing into normal looking shoes, so that's a risk. What's with this loss here? I don't know. Look into it. Seasonality, not that I believe in that too much these days. It looks okay. Nothing outrageous. So decide, are you trading or are you investing? It is tradable and it is investable. CrowdStrike. Somebody shorted it last week. Good job. High five yourself. I was like, whoa, you're pretty brave. Targets 460 potential still. This one. I'll move it. And we can add another one below it. That should be better support. 444, give or take. Of course, the red. Anything into 400 is super strong support, even at 390. This story doesn't change unless you lose 390. For the life of me, why is a stock that is so good, so volatile? One day they love it, one day they hate it. I don't understand that. That, for me, precludes me from investing in this company unless it's crashing. Then I'll just go in and just turn off the screen, as they say, on it and hold it. Buy the dip, yes. This is not a deep enough dip for me. CoreWeave, just like Circle, AI company. If you don't know what it does, I think I can set you straight. Remember the old school, you have a small company, you need technical team to get your LAN and WAN going back in the day, and you hired technical Joe Blow down the street to do that for you. You outsource that department so you don't hire 2 or 3 people that can put up your network. I think that's what they do for, among other things, for AI. But they also have big deals with big companies. It involves power and all of this. So the story is convoluted, and you should know it's part of that circle of money that everybody's talking about. There is an incestuous circle of money that is BS headlines. $100 billion deal between NVIDIA and forgot who. Anyway, and then $130 billion deal between that who and AMD, and $100 billion deal between Oracle and whatever. But it's the same money that's going in circle, and one of these circles is this company. So they have a good prospect and they're playing in a good field. Technically, I would buy the dip. The closer to 104, the better. And you can probably also sell puts in Crackle in CoreWeave, because we went long on the dip as well, but I don't have it in front of me. I think I closed it for a win the last time it had a tizzy. I bet you can sell really, really hot puts in it because the market is probably expecting calamity from it. So be careful going all in. Investment-wise for the long term, yes, on dips especially. Trading-wise, you have plenty of support, but the potential for disaster is there. It's one to hold, by the way, CoreWeave. Cisco. That played out. Cisco falling into support. The support zone extends through 66, 65. As long as you're above that, you're fine. Don't lose that, because if you do, we're going to have another conversation. Resistance, I don't think it can break 70 in a while without a super strong headline. Earnings in 30 days. Great company, by the way. One to own for a long term, obviously. If you want levels on Cisco immediately, what's going on with TradingView? 69.60, 68.80. Resistance on Cisco. Okay, Daktronics. Tiny company. Yeah. Falling into the baseline from which it sprang on earnings. If you said, oh man, I wish I was long on earnings, this is your opportunity to get long. I don't know anything about the company. If you chased it up on the earnings, please don't do that again, and don't add here. So those are the 2 potential things I can see saying about it. DFDV. Who is this? DeFi development. So I'm going to take it crypto related. Support at 1450, and don't lose 13. 12.9. If you lose 12.9, you're probably going to test 10. On the upside, take out 1850, you go to 2150. Those are trading comments. As far as investing, how does a company make 15 million when their sales are only 2? Okay, look into the company. DG, I'm not saying it's a shyster company, just you need to know. Dollar General, I wouldn't touch this company with a 10-foot pole, to be honest. But this descending channel, it's in the hands of the sellers for the last couple of months when the market is in the hands of the buyers. The market looks like this, and it looks like that. Falling into a good baseline. Backup baseline is through 86. Oof. Yeah. So anybody that bought it here, please reach out. You need a private lesson in charts. You could save yourself the agony of doing anything like this. And just like anybody shorting it as it falls into 85, they need a lesson. The breakout was 85 through 90, and we're falling into that breakout zone. So there is support below, and there's definitely resistance above 108. With that, we end video 1.